Welcome to the Startup Funding Espresso. I'm Hall T. Martin, where we talk about how to raise funding and invest in startups and the time it takes to drink an espresso. If you have a question about startup funding or investing, please go to the website, startupfundingespresso.com, and type in your question into the chat bot in the lower right corner to receive an answer. I hope you enjoy this episode. Hello, this is Hall T. Martin with the Startup Funding Espresso, your daily shot of startup funding and investing. There are several key SaaS metrics to know when evaluating a startup. Here's a summary of the key metrics. SaaS quick ratio, new MRR divided by the churned MRR. This measures how efficient your growth is. Low efficiency will make scaling difficult. LTV to CAC, lifetime value to cost of customer acquisition. This measures how long customers continue to use the product in comparison to the cost of acquiring that customer. An early-stage company should see a 3-to-1 ratio. Over time, it should improve to 5-to-1 and later to 7-to-1. Churn rate. This measures how many customers drop off during a time period such as a month. Segment the customers into groups to examine churn to see where the business is not succeeding. 40% rule. Growth and profitability should add up to 40% or more. There's a trade-off between growth and profitability. The more invested into growth, then the less profitability. This shows the viability of the business regardless of whether or not they focus on growth or profitability. Use these metrics to understand a potential startup investment. Thank you for joining us for the Startup Funding Espresso, where we help startups and investors connect for funding. Let's go start us into today. Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.